My name is Eric Usher. I'm with the UN Environment Program's Finance Initiative, or UNEP FI. It's been a busy week, and it's one more week to go, and we're all expecting for a positive outcome. I think in terms of what we've had at this forum today and tomorrow is extremely important. And although the negotiations between governments at Le Bourget is mostly an intergovernmental discussion, we know, and the text, the formal text, will only have sort of fleeting references to what they call non-state actors, so non-governmental or non-national governments. We know that governments, in terms of the commitments they've put forward through their INDCs, are expecting to rely heavily on the private sector in terms of carrying out the commitments that they are making. Today we've heard a lot from leaders, leading actors in industry, basically those who are taking actions forward today. Some of them are doing it for policy reasons. Most of them are doing it because they believe this is positioning in the new low-carbon economy. And it is basically time to take action, be it in decarbonizing our energy system, transport, other aspects of the low-carbon real economy. Also, we discussed carbon pricing and issues of how to improve efficiency and how do we transform cities, how do we improve agriculture, forestry, water use. I think as we've been hearing repeatedly this past week here in Le Bourget and all the other places around Paris, the technological solutions are now available. I think that that's clear, and that's a big change from 6 years ago in Copenhagen. Industries are engaged, and the policy frameworks are starting to fall into place. All that we need now is the capital to realize this transformation. Now, I don't want to say that hasn't started happening. Definitely it has, and we've heard some very significant commitments this week and quite recently, but it's a scaling up momentum that I think we are sensing now collectively. So what's the future of climate finance? Can the capital markets really rise to the challenge? And what's the role for the different types of financial actors, public and private? We like to say that scaling up private finance requires three things: information, transparency, disclosure, innovation, new products and services, and dialogue between the public and private sectors so that we get the frameworks right. I won't speak too much about it, but anyone in the financial industry is awestruck by the changes that have been happening. And if I can pick one, it's the one that everyone refers to, which is the announcement of the Governor of the Bank of England, Mark Carney, and his speech that he gave to Lloyd's of London 2 months ago on the tragedy of the horizons. And basically the need, and there he was directing at the insurance sector, but more broadly at the finance sector as well, that we have a challenge that has some fundamental challenges that need to be resolved. And we heard references to the regulatory or the frameworks, economic frameworks. And this question of, is the financial system fit for financing sustainable development? And I think as a starting point, there's an increasing acknowledgement, well, no, it's probably not perfect, that work needs to be done. 2 days ago, Mark Carney, who's also the chairman of the Financial Stability Board, an important body to try to bring stability to financial markets, and now seeing the creation of the Climate Disclosure Task Force, which is going to look more carefully at the issue of information. Do we have the information that's needed for the financial markets to work effectively? I think all of the panelists might have something to say about that, particularly one. So I think that's one fundamental issue. Innovation, new products, new services, new thinking. That is fundamental. We need the frameworks, but we also need the ideas. And we are also starting to see that. And we also have one speaker who's leading in development in one of those areas in green bonds. And we have the issue of dialogue. And what does it take for if frameworks are needed? Are they going to be voluntary? Are they going to be regulatory, mandated? And how do we tie together this link so that as we move forward together, we'll have the type of systems that will most cost effectively and socially effectively mobilize the investment for the things that need to be done within the real economy? So with that opening, we have a great cross-section of the finance industry here. We have three speakers and specialists. We have Sean Kidney, who's the Chief Executive Officer of Climate Bonds Initiatives. Sean has been probably one of the most effective proponents of this development, of this innovation called climate bonds or green bonds. He's going to give his insights about how this market has got going and what more needs to be done to really scale it up. We also have Miguel Albero, who is the Global Head of Origination, Trade, and Working Capital Solutions at Santander, a very large Spanish banking institution, which is dealing with many aspects of financing the low-carbon economy and the challenges of being a broad banking institution that is requested to do everything in the economy. How do we make decisions about how we start to transition financing from the brown towards the green? And then finally, we have Michel, Madelain, the President and Chief Operations Officer at Moody's Investor Services, where information is king. And I think that the question is, how do we bring together the information and how do we package it in ways that investors and other actors can make the most effective use of it in making the right investment decisions? So the way we're going to start is we're going to have some opening comments from the three specters. You're very experienced. You've been taking part in various fora, I think, in the last days. So what do you see as the fundamental challenges? And particularly, I think, this criticism that the financial sector gets sometimes, which is, does financial innovation just work in the financial economy, or does it actually arrive in the real economy in financing the type of solutions that many other rooms and here earlier in the day are talking about, the things that need to get done? Sean.
Well, I'm not a big fan of the word innovation. My stakeholder base, pension funds and insurance funds, and generally innovation scares them witless. So I want to beseech everyone, in terms of appealing to institutional investors, let's not say innovation. Let's concentrate on the words safe, secure, which happens to be the characteristic of the green bond market. Safe, secure, unlike the equities market, which is high risk. That's the first thing to know. We know about the scale of what we've got to do, 53 trillion between now and 2050. We know about the kinds of investments today. But what we don't realise is that when you have a closer look at the International Energy Agency's report for how to resolve the crisis in front of us, to avoid the utterly catastrophic path that we're on, most of what we have to do outside of land use and agriculture can and should be characterised as infrastructure. Now, I'm saying this very advisedly, because when you start talking infrastructure to treasuries, they start understanding what you mean. When you talk about climate finance, they put you in the basket of the Ministry of Environment, which is the last place on earth you want to be when it comes to climate finance. So we actually have an opportunity here to change the narrative using the IEA's work. Why is this so important? Well, I'll give you one example. The G20 has two working groups now. Thanks to the Chinese, the Bank of England, it has a G20 Green Finance Study Group. But it has a separate infrastructure working group way over there where Michel is, where nothing is happening. And they are acting as if the main part of investment in societies the next few years is unrelated to climate. In fact, it's exactly the reverse. What we need to do globally is to make sure that most of what we do in infrastructure between now and 2050 is climate resilient and is low carbon. And in fact, that's a really exciting prospect. You know why? Because when you start talking infrastructure, you realise, my God, we've successfully been financing infrastructure for 150 years. We've been doing it really well. We built hospitals, we built roads, we built railways, we built everything you see around you, like this stadium. It's always been mediated by government. It is not a free market exercise. It requires regulation, it requires planning law. Sometimes it requires floor pricing, like that 75-year deal that Macquarie did of Chicago outside on a long freeway. These are the ways we make rapid transitions to a green economy. We use the same toolkit we've used to build infrastructure, we put the word green in front of it, and we reapply it. Now, pricing mechanisms are one tool. Carbon pricing is one tool. There are others. Now, to do it, though, once you understand that, you've got to check, okay, we do need a lot of capital to do this. 53 trillion is quite a high burden, a high capex lump, as the IEA puts it. Well, guess what? We are awash in capital globally. We are paying the Germans to take our money, negative interest rates in Germany, in Sweden, in Switzerland, etc., even with the EIB. This is lunatic. We are, in fact, have huge piles of capital around the world that are underemployed. And What's going on? He's got the money, he's got big brown bags of it. Him over there has these big infrastructure plans, like in India, 175 gigawatt of solar, a huge rail renovation in India that if it's done properly will keep cars and trucks off the road. Now, why can't we just bring these two together? And there you have the secret of our path forward in the next 2 years. And the tools to bring those two parties together, as I said, are in the bottom drawer of every single treasury in the world. We know how to do it. There is an innovation. It's a policy innovation, not a financial innovation. That is, we need to get rich countries talking to poor, because the money's here and we need to earn pension money for when we retire. I hope to get a pension. The only way I'm going to get a pension is if I successfully start investing in India, in Nigeria and Brazil. I'm not going to invest in the general stuff. I need some credit support. I need the European Investment Bank or KfW, the World Bank, to come in and convince Moody's that the deal flow in India is not rubbish, that it's going to be reasonably safe. They're going to have to do credit lift. They're going to have to do foreign exchange hedging pools. Don't get me wrong, this is old technology. We know how to do it. It just hasn't been deployed. And that's the way we have to go forward. The green bond market, which grew from 11 billion a couple of years ago to 41 billion as of today, is merely a symptom of the kind of deals that are done in that kind of way. That's all it is. It does one really good thing for us. It shows us that investors will buy if they're given the right kinds of deals, if they're given investment-grade deals that suit their requirements, and they'll give you a little bit of price. ING, when it issued its bond a couple of weeks ago, was 7 times oversubscribed in 48 hours, and they got a small price benefit. I mean, it's not a price benefit you'll recognise on your mortgage, but it's a price benefit that a treasurer understands, around 10 basis points, and that's exciting for them. So the market is growing strongly, the demand is there. I spend all my time now, after having spent the first 5 years working on the buy side, trying to encourage people to issue. We simply do not have enough product. We have an investor coalition tomorrow releasing a statement representing 10 trillion saying, please give us more green bonds. Please, we will work with you to get more green bonds out. So if you are a large, safe company, or you have access to a bank that can de-risk your portfolio, now is the time to do it. We are trying to build a large and liquid market. We are doing things like removing an illiquidity premium by making it big quickly. We are doing things like exciting governments that maybe they can get their stuff financed by the private sector. I had a meeting with a premier of a province yesterday. They're talking to us because they've seen these dollars piling up and they're saying, okay, so what do we actually do here? Well, luckily, I happen to have the old energy financing kit that Eric did 5 years ago, and I can wheel it out now that we've got their attention with this market, which is in a way a marketing theme. Now, my last point, one thing we need to understand about investment now that we're focusing on the thought of investment. This does not work necessarily in rational ways. If we try and deal at this with Washington consensus economics, we don't necessarily excite people. It is true that the investment sector is built on sentiment. It is built on confidence in the future. If there was one thing I would say we have to get out of Paris, it's not an agreement. I don't actually believe we're going to get a strong agreement. But there is one thing we have to get. It is confidence that we are somehow or other, one way or another, going to make this green transition. That's all we need. If we have a sense of confidence, the investors will continue to invest and will follow, because that's what they're looking at. What kind of world can I plan to invest in the future? On the back of that, we can do this. But remember, if ever you're talking to a treasurer, a minister or finance official, they've got the toolkit in their bottom drawer. Just get them to pull it out.
Great. Thank you very much, Sean. So how do we stay safe? Al Gore, a couple days ago, commented in talking about stranded assets that financial markets are often built based on illusions. And to some extent, what's needed is to prick the illusion, to give the reality of what the real risks are there. I think what you're calling for is, to some, it's creating the belief. Some would say it's an illusion, basically the belief that the new markets are also going to be there, providing the horizon and providing the certainty that investors need to start moving into this sector. So let's stay safe and secure. Let's move to Santander. You're a large financial institution. You finance the economy. And question, Miguel, is do you believe that institutions like yours can get ahead of the economy, can lead this change, or do you need the economy to change first?
Thank you very much, Eric, for your introduction and your question. In fact, historically, the private banking has been proactive on this, making these kind of decisions and actions. We in Santander from the last 12, 15 years, and many times without any kind of government support. Just to share with the audience some figures, until 2013, the private sector was responsible for the 58% of total resources for investing or for financing the climate change actions. So it means that we are taking ahead the responsibility of going with these targets. And also many times because we have external factors impacting in our decisions and our way of doing things. For example, if you are a multinational organization like Santander is, as you have a presence in different countries, in many countries, then you're going to find different regulatory frameworks and fiscal frameworks in each country. So at the end, you have to combine a global strategy for your organization, but you have to implement this strategy in different countries with different regulatory frameworks, fiscal frameworks, and government supports. So at the end, we have this way as a need as well. But the most important thing here is not forget that this is a game where all players are needed. Okay, so I mean government, public and private institutions, banks, corporates, and at the end citizens as well. Everybody, we have to go together, trying to put together our efforts, trying to get the goals. So as a conclusion, no success is granted without a global players' commitment.
Great. Thank you very much, Miguel. Michel, if you can try to pull this together. We came from a meeting just earlier today with stock exchanges. Stock exchanges are one of the new actors in terms of on the information side that are getting very interested in realizing that they need to play a role. In terms of rating agencies like Moody's, how do you see the evolving frameworks? You know, we have a deal at the end of this week. What does it mean for ratings, and what is it going to take to actually put a deal into action?
Yeah, thanks, Eric. I think, first, when you think about the source of fundings, really two you can think of. One is public money, one is private money. Public money is a matter of policy decisions, commitment, and will. How much are we ready to deploy? How much governments are ready to deploy? When you think about private money, then you need to think that the criteria for successful deployment of this money is no different from what is being used, and I'm sure you will comment about that later, for other source of or other type of investments. So people think in terms of risk and returns. They think about the liquidity of the assets they're investing in. They think about the integrity of the marketplace. They think about the transparency they have and the understanding they have of the risk they face. So there's no thing specific about climate finance that make it somehow different from other sources or needs for financing. And the reality and the part of the issue here is that climate change and climate finance is a topic that is still facing a high level of complexity, a high level of uncertainty, and where investors are faced with a possible wide range of outcomes. And to make an investment decision in that context is very difficult. So that's the handicap that this financing faces. Now, you add to that the fact that some of this financing takes place in markets that are less developed, where you have political risk, you have currency risk, you have a number of risks that can be hedged, but are probably more pronounced than in other situations. So you really have to start with a more complex hand to deal with. Now, what can be done about that and what we see being done I think the first, probably the first and most important element would be the perception that one will have around the policy commitment on addressing those issues and how they will be addressed going forward. Because that's going to really give a sense of what likely impact one should expect. And one has to remember also that, and that's something we observe in the work we do, is that the most impactful and biting aspect of in climate change today is the impact of regulation and public policy, when it starts basically impacting the risk-rewards equations of the investments. So that's one aspect. The second aspect, which I think you evoked and we discussed earlier today, is really the need for simply better understanding of the risk and more transparency and the right type of information, and I'm sure we'll come back to that in a few minutes. And then the last point, and going back to a comment that was made earlier, is you probably also need something that helps you bridge basically the difference in expectation and demand between the investor community and what is made available to them in terms of investment. And that's really around the risk appetite, and that's where public policy and public bodies can sort of act as a relay and as a bridge basically between this bid and this ask that is not necessarily aligned today.
Michel, question. Miguel, did you want to add? Please.
With your permission. I would like to add some comment from the banking perspective so this topic. In my opinion, I think one of the most important things to bear in mind in order to get success on implementing green economy targets, strategies, and goals, I mean, at least in banking, okay, is the capacity you have to internalize a climate action culture in your business level. I think it's absolutely important because the idea is to transfer from the corporate level to the business level one, this changing of mindset of the people which is involved on the daily business. I think it's crucial this idea because usually we are in the highest level of the targets of the actions, and the people who is daily working with clients, with deals, with potential operations in the DCM, for example, the debt capital markets or whatever, is the front end of the bank. So the idea is giving to these people this powerful tool of mindset, thinking always on climate action. If you got success doing that, then you have your people working in all day with this vision of green economy. So I think it's very important to have this mindset on your people in the front end level.
So I think, Miguel, what you're referring to is cultural change. And I think as we look at the types of commitments or actions that have been put forward this week and in recent times, it's very important to look at is this indicative of cultural change? And I defined in two ways, I would say, from our perspective. Is it coming from the top of the organization? Is this something that strategically is being discussed in the boardroom? And is it only looking at enlarging the green portfolio, which is needed, but is it also looking at the brown? And so from a strategic portfolio-wide perspective, you're starting to get these strategies to say, how progressively are we going to decarbonize? How are we going to do it to move to action? First, we need to know our carbon footprint, or we need to assess the risks, but then we need to figure out what are the responses, what is the action, what are the types of products, safe and secure, that we can employ to start to shift what many of these are essentially super tankers. Miguel, and then Sean, I think.
Okay, thank you. I think we need three items on this point. First is to have a very good and professionalized team for managing these issues. Then you need very good people, very good technical guys involving on this area. Usually you are going to find this team on a corporate level of your organization. Second, you need each day better tools, because at the end we are in a world where we are going to find each day much more ambitious and aggressive goals. related to this field. So we need better tools, I mean, new government measures or regulatory or framework or fiscal policies, better new instruments in the capital markets like green bonds, for example. These are a very good one. And also we need, for example, a standard on carbon pricing for banking sector is crucial. It's crucial because if we had a standard on carbon pricing, then we have the capability of include it in our model risk assessment. And then you have the capability of create an asymmetric analysis, evaluation, comparing green projects and brown projects. And then you have the capability of separate or split off the positive impacts and negative ones. And this is very important, especially if you are trying to go ahead of this excellent target, which is decarbonization of our asset portfolio.
Okay, thank you. Sean, I'm going to go to you, and I want to put an add-on question.
Can I just say something?
You start, I'm going to ask you to go again
Please,
as well.
please. Culture change is important. But a bank is a bank is a bank. You know, they've got to do trading. They have coal lending. They have gas lending, and they're going to have it. And we need to make it easy for them to shift. And the only way we do that at this stage is create assets and products and deal so they can actually happen. I mean, this is not a slow change. This is not a change where we have 10 years or 15 years or 25 years. Christiana Figueres thinks we have 18 months, actually. But in terms of tipping point science and climate change, we need to see rapid changes in the material fabric of our societies in 5 years. What we need to be focusing on is how we encourage the building of the right kind of kit that will support those material changes. I think it's fantastic what Miguel is saying, by the way, don't get me wrong. But I just want to be clear that if you want to look at your priorities for change, you're going to need to have a lot more railways built fast in India, in Brazil, and places like that. You need to make it cheap and easy for them to do it. We clearly need to rapidly scale up renewables by reducing the cost of capital, which is the only impediment we now have left because the unit price has gone down so fast. These are things that we've got to do in a hurry at scale. It will take the public sector. We can do it fiscally efficiently, and that's where the main game's got to be in the short term. Even carbon pricing, I'm sorry. I do not believe we're going to see a serious carbon price in the world for 10 years at best. We need carbon pricing, but if we wait for carbon pricing, we are buggered. And that's my main message today, that there is a toolkit to act quickly. So what we need Santander to do is to go out and do a lot of deals that are green as quickly as possible and create the deal flow so they can do deals. I want them to make money on the green side of it so they'll have less need to make money on the brown side because they're not going to close down their brown side quickly. They're a bank. They're a listed company. We have to make an incentive. So that's just my tuppence worth.
Okay, thank you, Sean. I'm going to come back to you. I'm going to turn out to the audience quite soon to continue the discussion. In Le Bourget, between governments, there's a lot of discussions about trust, accountability, and I'm wondering, financial markets are built on versions of trust and accountability. I'm wondering, Sean, what is your views, and I want to come to Miguel and Michel as well, about where we are and when is the right time, and is there a need, and who creates trust and accountability in terms of developing new, safe financial instruments? Is more needed? Take the example of green bonds or other instruments today in terms of how we're going to build up that trust.
You know, what's missing in the trust and accountability in world, mainly globally, is an understanding of what are the right kind of assets. Mm-hmm. So when I speak in governments around the world, they're asking, so what are the right kind of water assets we've got to build? There is, in fact, the science base, and you will know that what this conference represents is the discordance between a science community that knows exactly what we've got to do, and is, in fact, has got an epidemic of depression because the rest of the world isn't listening to them at the moment, and a finance community and a policy community over there that is still thinking like it's 2000 or 1990. That's the discordance. Mm. So when I talk about trust, the first thing we need is trust that we're making the right decisions about infrastructure to address the world that our scientists are telling us we're heading into or we've got to do. That's part one. What it means in financial, to give you a practical example, in the green bond world, we've got a fair trade style certification scheme for green bonds. It is built on a global science community view of what's wrong, right in transport, what's wrong, right in water, what's wrong, right in agriculture and forestry. So we want to be able to give clear, simple, easy to use rules for Santander. So when they're trying to figure out, is this a reasonable deal from a green perspective, it's been sorted out by the scientists, not by the investors, who frankly don't know, not by me, I don't know, and you don't know, frankly, because it requires intense expertise. That's the step one. And then we need reporting, review, monitoring. We need to make sure that if a green bond, my area I work in, is issued now by Johannesburg, it is actually invested in the right kind of way in a year's time. In fact, there are a couple of problems with the Johannesburg bond that you might know. Some of the money's gone into roads. We need to engage them and say, you know, that isn't really a very good climate investment. So yes, you do need all of these sort of things. And you know, for you guys, when you're investing your pension pot, and if you decide to choose green, which I hope you will do this year, because this is the only way we're going to have a real future, you want to know. You want to know that someone is checking that the money is going to the right place to help address the planet. So we need a visible governance mechanism that you can have confidence in. That's what we need.
Michel, is it easy to rate green bonds?
We're working on that, actually, and more to come. But I think, to go back to the point you made earlier, I think, you know, the issue of trust and confidence, there is no need for new, you know, the existing equity and fixed income products are, you know, plenty and can be used effectively to meet the needs that we're discussing here. The real issue is more a question of the supply of investment opportunities rather than actually the availability of funding. Think, you know, the amount of public debt outstanding today is about what, 150 trillion, 160? The amount of equity outstanding globally is what, 60, 80 trillion? Those are that's just the amount of, you know, funding we're talking about. And so the few trillions that are being discussed are, you know, very small in relation to all of that. I think the real issue is that, again, there is still a lot of uncertainty about what needs to be done, how quickly, with what type of policy environment, and until this is being addressed and this is resolved, investors will continue to be concerned about the risk they face unless that risk is being taken off by someone, and that someone, you know, if you look around, the only place where this can be is typically public entities who can offload that type of risk. But until we resolve that level of uncertainty, it's going to be very difficult to mobilize the level of investment that is required.
I'm sorry to get carried away, but if I just back Michel up so fully, that the only way we make a rapid transition of our economy is that the public sector selectively takes on the risk of transition. That's what it is. We can do it efficiently, but that's exactly right. If there was one message you would take away if you're a policy person, you need to be thinking intelligently about how to use your public sector balance sheet in your economies, development banks included, to take on enough risk to make all of this work for our pension funds. Simple, really, isn't it, Michel?
Simple, yet we have one of our participants on the panel who has lived through a period where government did take on a significant scaling up the renewable energy industry and then ran into some challenges. Miguel, do you have any, looking back in the mirror, how can governments learn from the experience in Spain?
What I could say at this point is, in general, we are working in progress, okay? We have achieved very good results, very good goals on the past, and we are trying to collect or fix much more ambitious targets for the future. Transparency, disclosure, accountability, trust are welcome, are very good tools, and we are 100% agree with that. Okay, just to fix to the question about Spain or whatever you are. I'm not going to mention any special company or corporate implicated and any special measure taken by the government. What I would say is the most important thing is I could say the core business is the most important thing when you are looking, we are analyzing and green project comparing with a brown project. The most important thing is the core business. The most important thing is how are you going to manage this project. It's not so important. It is at the end you are getting success on financing one project or other, because most of the times it's not depending, it's not relating to the nature or the core business of the project. It's relating to conduct your business not so well, or maybe because you are taking a high leverage in your project that you should do, or other third questions, reasons, or answers. So at the end, the most important thing is, okay, let's focus on the right nature of the project and try to go ahead with the very interesting project is behind of the nature of the project. It's not related with other things, okay?
Great. I mean, I think one observation on that, and I think part of the reason for confidence in the ability for the developing world to play a very significant role in addressing climate is a lot of the technologies, the core of what they provide, energy, transport, this is what's needed in the developing world. This is where most infrastructure investment is going to be required out to 2030. And the fundamental reason for building these projects is because of those services they provide. The fact that they also own low carbon is an added benefit, but also often the economics are based on the fundamental projects. In Europe and other OECD countries is the challenge that often the value is on the greening, but the underlying fundamentals sometimes can, the fear that governments will back off on policies if it's too over-subsidized, and how do you get the price right? And there has been some painful experience. I think governments are learning. I think governments in Europe are learning a lot from governments in emerging markets who have been taking over, I think, the leadership on the policy side in terms of renewables with their auction systems. I'm going to open it up to the floor. Please put up your hand. We have a patient lady in the front who has a question, and we're going to bring up a microphone.
5 minutes.
Okay.
Gentlemen, thank you for your incisive comments, remarks, and opinions. I would like to make a couple of observations. One, that it is not money that makes the world go round, it is actually energy, and it's the sun. I'd also like to make another comment, and I think it was Einstein who stated so succinctly, insanity is doing the same thing over and over again and expecting a different result. Given that that's the context, and given the fact that, as we've all witnessed over the last 15 or 20 years, green activity has so often focused on those people who are able to market, and so we have a large amount of greenwashing in terms of innovation and new activities and products and services. Okay, so there is some very scientific measures for embodied energy, and we do, as so well stated, have the scientific knowledge around this planet to measure the embodied energy of products and services which require investment.
You get to your question?
I'll get to my point right now. Really, the one common denominator that the science community is absolutely sure about is that there is an effect on the carbon cycle and the level of greenhouse gas emissions, and that the best way to have governance and regulation is to have a price on carbon. You cannot trust the old ways of doing business and this person knows this and this person knows that. It must be based on science. So thank you for your insightful comments, gentlemen, and that's mine.
Okay, I think that's a statement. I doubt anyone on the panel would question what you've said. Coming to Sean's comment, it's very unlikely we're going to have a price on carbon. We probably will have many prices on carbon in the coming years, mostly instigated through government policies and pricing frameworks. Over time, maybe you'll start to go towards individual prices. But can I take one or two other questions, and then we'll put it back to the panel? The gentleman back here, and then here, and then the lady here. So I have 1, 2, 3, and I think we're probably going to have to, unfortunately, leave it at that. Please.
Sure. Thank you. Hi, my name is Nicholas Blanchett. I'm coming from the London Business School. I guess this question is mostly, addressed to Miguel. So I guess having worked in a big financial institution for some years like Santander, I guess on the one side you have clients who want to raise some capital to fund some green projects, and one way is this green bonds. But on the other side, you also have big institutional clients that want to raise some money for big brown projects. So the question is, for big institutions like Santander, how do you go around this internally? And in the few past years, have you noticed any sort of differences in how you internally approach whether you will proceed with some of these deals, and what's your perspective in the next few years on that? Thank you.
Miguel, if you could hold that, I'll take a couple and then we'll do them all at once. We had another question here and then back there, just here.
Sorry, it's another question from Miguel. This is Brian Kilkelly. I wanted to know about comments earlier on about sort of catalyzing kind of skills of the executives. It sounds like there's a large gap still in terms of people's ability to kind of grasp the big opportunities, especially around the opportunity that climate change provides. How is Santander sort of tackling that kind of challenge? How are you enabling your teams to kind of really mobilize and take action?
Okay, last very quick question and then very quick responses. Please.
Yes, I actually had two questions. One, what is the value of public health impacts for the investments in green strategies, and can that be quantified from any of the panelists? And second, any opinions on pay for performance financing?
Okay. Miguel, do you want to go first? Two of the questions targeted.
Thank you. Trying to answer the first question. It's very easy to answer to you because just to share an information, in 2014, Banco Santander was the best bank, named the best bank in the proportionality of combining fossil fuel energies and renewable energies so in the world. So for us, it's really easy for managing this because at the end, as I mentioned on the first intervention, we are transferring this vision of climate change to the front end of the bank. I think there is no secret. It's that, as simple as that. Is trying to have your business people involved on the daily business with this mindset, ready for hearing, for listening, for seeing any opportunity. I'm trying to answer you as well the second question. Believe me, it's no secret. It's just to try to transfer and to have the people on the first line of the bank with this mindset. It's not easy. You have to work every day with them, okay? Because in business, as you can perceive, we have to think every day on P&L, profitability, yield. This is the usual words we have to use every day, no? But at the end, the important thing on this field is try to have ready to go with this mindset. The people is in the front end of the bank.
Michel, you have the instruments that you need today. Do you have the mindset? And if not, what are you doing about it?
I think we do have the mindset. I think the work we've been doing in terms of research, in terms of improving analytics, in trying to capture those risks in default risk, which is what we do, has improved. But we're also in a learning phase. This, as I said earlier, this is a risk we continue to try to understand and dimension. There's a lot of variables that it's a very complex set of issues. And I don't think anyone can pretend today to be able to have a definite answer on the level of risk and what it means for the investors. One point I'd like to make, which maybe my concluding remark today, but I really think that it's very important that we don't treat these assets as different from any other assets. They need to be viewed, and I understand the point you made about different team and awareness, but at the end of the day, I think this will be a success if those assets are being viewed, invested in, developed exactly in the same way that any other assets is being developed and offered to the investor community. And I think that we have to be very careful not to try to have a siloed approach to what will be eventually a very important asset class for investors globally.
Last word to Sean. This is what you're trying to do. Do we need a deal? at the end of the week to help you do it?
We will know we're successful when pretty well everything we do is put through a climate filter. We will know we're successful. That's every government budget item. That's every deal flow has at least a climate resilience filter on it. Moody's has actually been doing some great work at starting to examine the risk factors in the water area, for example. And that's kind of what we need. So really, every infrastructure deal especially, every large-scale deal at least, needs to have a climate filter. So I've got a bet going with someone in capital markets is how long it'll take before all of finance can be characterised as climate finance. She says 2025, I say 2050. But whatever, we're in agreement that that's where we're going. This whole society needs to rethink its way. The biggest opportunity we have today, in my view, is INDCs. That has been the singular greatest achievement for me of the UNFCCC process the last couple of years. Because we have the beginnings now, the beginnings of infrastructure investment plans, which is the next stage. If we can convert these vague, sometimes one page, like the Pakistan one, INDCs, into concrete infrastructure investment plans, we can engage those treasuries because they know what to do about that. We can engage Moody's, and I can tell you now, because we're launching a coalition on Wednesday, the Green Infrastructure Investment Coalition with the Principles for Responsible Investment, representing 60 trillion, that the investors want to engage on that particular issue. But it will require all the toolkit, public sector, risk bridging, and so on. But that's the way forward. And what that will mean is that within 5 years, we will have, in atomised formats around the world, effectively a global industrial transition plan, which is the only way we can make the transition in the speed that we've got to make it for, because frankly, we've left it so late. So it's got to be fast.
Super. Thank you very much, Sean. Michel, Miguel, I think you've done a great job of throwing the ball back to the public sector. And there's nobody better who can pull the pieces together than our final closing speaker. But in the meantime, I would like to hand to our speakers and thank you very much to the audience.